Is the market about to go over a cliff? We're at the 50-day moving averages and sliding below them. Federal government shut down. AI stocks crashing. We're going to talk about all the action today on Stock Talk Live. It's Money Mark for you newbies out there, a 30-year veteran of Wall Street. I was paid for my picks by companies owned by Jim Cramer, Steve Cohen, and if you saw backwards, Jim Cramer, George Soros, and if you saw the movie Dumb Money, Stevie Cohen. Stay tuned, despite the looks. This is not a great production, but it's great content. We've got 14 straight winners still in this situation. We're going to talk about a lot of stocks, not just my picks, your Q&A, AI names, non-AI names, the economy, you name it. We need to unpack it all at this critical stage of the market. We're going to get started in just a minute as soon as we get our live studio audience out there, as we do every week. So if you were watching the replay, you could just fast forward about a minute or so. In the meantime, make sure you read these disclaimers, okay? This is a clown show. This is a parody of the CNBC world. So nothing I say should be used as information to make stock decisions. I'm not a registered financial advisor. And by the way, I reserve my right to buy and sell stocks at any time, regardless of what is said on this show, because I do have day trader status and I take advantage of all kinds of moves in the marketplace. And hopefully you follow my rules, which is to not chase any stocks, not create a situation where anything I say, nothing I say should move these stocks. And therefore, there's no manipulation going on. Hopefully that's enough of a CYA for yours truly. All right, come on in, share the invite, get folks in here. Realize also that I will be answering Q&A until 3:55 p.m. If you want your I was just reminded of how pissed off I am. Coach A-Hole is back. Coach A-Hole is back because he has to be back because a lot of y'all want the easy gravy train. A lot of y'all think, oh, I got this down pat. You don't have this down pat. As soon as the market starts going down, you get patted down. Okay? And it's because you don't make the effort. Not you. Other yous, the dummies out there, not the smart ones out there that have your notebook, that you have your pen, in opposite order, right? And take notes and learn this stuff so that you don't have to rely on somebody like me every week, CNBC, right? Remember, this is a clown show. This is a parody. But I'm telling you some truths in here. Let's double check. We got the audio. What do we got? All right, we got the audio. We got the video. Cool. We got the numbers. You guys shared the invite. Beautiful. Coach A-Hole is modestly less angry than he's going to be this week. And you know what it is. Let's go right to the charts. It's Friday. It's Money Mark. It's Stock Talk Live. We got a big show because we are at a critical juncture. Let's zoom in on the charts. Right off the bat, look what's going on. We got these crashing movements, and we got our 50 and 200-day moving average here, and look what's happening. Something that hasn't happened since February. A breach of the 50-day moving average. We came really close here, but bounced. A nice hard bounce, right? The S&P jumping 5.5% in just 18 days, bouncing off that 50. Today, it's a battleground. It's an absolute, and in fact, if we zoom all the way in, whoa, this is a battleground. How's it going to play out? We don't know. Only God knows. So stop guessing and stop believing in the idiots out there that give you guesses. They just want your clicks. I don't give an F about your clicks. I make no money from this. There's no sponsorships, no advertisements, no nothing. Okay? I got no products. I'm a retired multimillionaire living in a penthouse on Miami Beach. And why? Because my mentor was kind enough to teach me. So I'm teaching you. A guy that went from living in a basement, not a basement apartment, a basement, living off of $300 a month. Half of that went to rent, $150 a month for rent, $150 a month for food, utilities. How is that possible? Yeah, it's barely possible. And I went from that to this. And I have to. So I have to give it back to y'all for 2 hours a week. But you got to do your part. You have to do your part, you dumbasses. Write down what is being taught here so you can learn it. What happens if money market gets hit by a bus tomorrow? You're done. You're dumb. Okay? That's most of my speech for the week, because y'all don't want to hear all the speeches. Let's see what we got here. This is my X profile. We are nearing 7,700 followers there. Thank you very much. This is where you can find me. Get my invites. Look, I haven't said this in weeks, so I'll say it really quick. 3 things to look for in a real stock analyst, somebody that you can really listen to, as opposed to the 10,000 clowns out there just giving stupid opinions off of no expertise. Trust me, it took me 10 years full-time on top of my full-time job to learn how to do this. They don't have that. 99% of those 10,000 people out there giving you stock advice do not have the 3 things I tell you to look for, which you're not going to write down. Their real name, mine's out there. In fact, it's right here. Your real credentials, which are right here, with hyperlinks as proof to what I've done in the past to justify giving you stock picks. Jim Cramer, George Soros, Stevie Cohen signing checks to me for my stock picks, for example. And number 3, a real-time tracker of performance. Mine going back to 2014, averaging 46% annualized. That's year after year after year after year after year after year. And that's after 5 years on Seeking Alpha from 2009 to 2014, where I picked for you, and here's proof, 24 triples. This article commemorates the 19th of them, and the other 5 names listed in this article all went on to triple. This is what you need. I'm not the only one. I'm not saying I'm the only person to listen to, but this is the profile of what you need. All right, so there's your speech on that. I don't do it often. In the description of this video is a bunch of links, a bunch of education, things that will help you, not me. I'm just leading the horses to water. It's up to you whether you want to drink or drown, to help you. Okay? We got this article right here, Get Rich on the Rules. Again, no tricks, nothing. I just wrote this so that I wouldn't have to repeat it millions of times to my friends and family. You're neither one. But you get the benefit from it. Okay? So you can read this. You can watch this. This was for my friends and family, but you can watch this. It's 1 hour. And on my Twitter account, pinned to the top, is this spaces that you can listen to. Grand total, 3 hours of your life to learn the secrets of how I went from a 0 to a hero. A horrible stock picker to a great one. A horrible trader to a great one. Okay? And in this period of time with the market tanking, more than ever you need to know this stuff. Okay? Because regardless of whether we get a Santa Claus rally, okay, you have to understand that there is a reason I have had us in yellow alert twice this year, right? Back here, before this crash, I didn't know that was going to happen. I didn't even predict the market was going to go down. But when you're in a yellow alert, that means that prices, value is elevated. Okay, I don't know what kind of neighborhood you live in, but if every apartment in my neighborhood went up to, let's say, $50 million per apartment, I would be selling my apartment because I would know that the valuations of the real estate in this neighborhood was elevated, too high, where one thing goes wrong and look out below. And that's what happened in the spring. One thing went wrong and look out below. And right now, the markets are panicking for several reasons, not the least of which, government is shut down, right? We had gotten to a high elevated level. You see here, you could draw lines under the bottoms and over the tops, and it doesn't take a rocket scientist. We can zoom in even further to see that if you draw a line under all the bottoms and a line over all the tops, we were at the high end of even the short term, the technical trading range. Okay, so this was to be expected. This is normal. The question is the party over, or do we keep going up? This is where we have to keep following the rules, and we remain in yellow alert, so you want to be hedged. Okay, RWM has been doing great in recent weeks. Let's zoom in on this drop off right here, and RWM, look at that, right? Because that's what it does. That's what RWM does. RWM goes up when the market is down, but it also goes down when the market is up. So don't look to RWM as something you're going to make money on. This is an insurance policy against the market going down. And in an elevated market, you want to have these hedges in place to help protect you against volatility. Having a hedge cuts your volatility. All right? During a great market, during a green alert, no hedges. Put all your money in the stock market, buy anything. Wait time stocks, speculative stocks, you name it. I never want to buy it. Never want to own a wait time stock, by the way. But I will own speculative stocks. During a green alert, they do great. Those are the multi-baggers, right? Company announces they're going to invent teleporters. It's BS, but people love teleporters, so stock will go through the roof. That's called a great find. And then it has to go through the wait time. The wait time of, well, where's those teleporters you promised us you were going to be inventing? And that's when the stock drifts lower because people lose the excitement that the PR gave you. And finally, the gold mine is when the dreams come true. There's actually a teleporter. It actually works and everybody's buying it. Okay? Until that starts, a wait time stock is a no-no. Even in a green alert, but in a yellow alert, death. Death. Look what happened to Navitas. Okay? I told you I had third-party, independent, industry experts. I am not one. Are you? Are you an expert on the types of semiconductors that Navitas produces, develops? Are you an expert on the use that is expected of those chips? Which, by the way, is not expected to take off until 2027? No. So you can't just fill your head with BS from the internet and convince yourself. That's called confirmation bias, by the way. Look it up. Pen, notebook, look up confirmation bias, and you'll see that human beings are prone to put more weight on information that validates, that confirms what we want to believe, and pushes the rest of the information as being lower value. Okay, you got the pros and you got the cons, and somebody say, yeah, but it's going to be 2 years until they really takes off, and you say, nah, that's not a big deal. I can wait 2 years. Oh, nah, it's going to happen sooner. You're pushing that information down because you don't want to believe it. You want to convince yourself and feel confident that you should invest in this company. That's not the right way to do it. Facts speak louder than words in this market. And so when I came and told you that the facts, the third-party industry expert, the dudes that I use with multiple decades of engineering talent in the semiconductor space, the people who spend all day, every day, and probably sleep and dream this stuff, and only this stuff, gave us the information that we needed to know, which is Navitas is not the best player in this space, is not operating great, is not using TSMC, and is going to have a hard time being very successful in this, regardless of the PRs they put out, because, oh, this pisses me off. Mark, they put out a press release that they're partnered with NVIDIA. So they F what? What does that even mean? Do you know? Partnered? Yeah, they're partnered. NVIDIA wants Navitas to succeed. NVIDIA wants somebody to succeed. They don't care if it's Navitas. Did that press release say exclusive partner? No. And that tells you something. Because they're not. They have competitors, and the competitors are doing a better job. And I told you that. And so even though we missed this ride was for the wrong reasons. It was over hype. And what happens? The hype dies. And then what happens? Navitas announces $100 million. See, I'm allergic to the stock. $100 million raise. That tanks the stock. 14% today on top of dropping 50% in the last 17 days. Another 14% drop on top of that. This is what ultimately happens because the market and stocks can do anything on any given day, on any given week, in any given month. But what is going to give you confidence to stay the course, to buy more when it drops instead of panicking out, is knowing to the best of your ability that you are in a great situation. If you don't know that, then of course you're going to panic out because you don't know. Something must be wrong. Yeah, there is something wrong. In this case, something's wrong. In this case, nothing's wrong. In this case, something's wrong. How do you know the difference? How do I know the difference? I need that third-party expert because I'm not an expert on what these guys do, and I'm not an expert on what these guys do. But I can find them out in the world. You might be one of them. You might be a semiconductor expert that can tell me everything I need to know about Navitas because you understand exactly the business that they're in because you're in it. All right? I keep sneaking in little speeches, but they're important for you to hear and understand because now you're going to go back to your portfolio this weekend and say to yourself, do I really have that confidence? Do I really have independent third-party experts? Not Wall Street, by the way. Goldman Sachs said, you think Goldman Sachs is an expert on semiconductors? The Goldman Sachs analyst has been an analyst ever since he got out of college. He has no semiconductor expertise. A lot of them don't. Some of them do. Right? But how do you know? You're going to have to look them up. See if they got those three things. See their track record. See who they are. Blah, 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 blah. Just follow the rules. Okay? All right. And if you are joining late, Coach A-Hole is back. Somebody's going to get yelled at. Maybe multiple people. Because there are people that have been following me for a long time that said some stupid things this week. Moronic. And it's the worst kind because when a newbie comes in and says something dumb, asks something dumb, at least they're a newbie. And I can say, dude, what you just asked is a dumb question. I'm not going to hold it against you, but please go listen to this, watch this, read this, and you're going to learn a lot that's going to help you understand why that's a dumb question. And then you're going to be able to help yourself. You won't have to rely on a clown like me because you don't know. I might be another one of them 10,000 clowns trying to convince you that I'm not. You have to arm yourself. All right, let's get into stocks. Let's get into the stock market. Let's see what's going on here. Boom. Fear greed index. Boom. Lowest level since April. You all remember April, right? The tariff tantrum. We don't have a tariff tantrum right now. In fact, the government's shut down right now. Right? So we're having a different kind of tantrum that's bringing us down to these low levels, extreme fear. Do you know what happens after extreme fear? And the problem with extreme fear, by the way, is somewhere around here, when we got to 13, 12, it may have looked like, okay, that's extreme enough, right? That was March 3rd. We didn't bottom out until April 8th. I couldn't have seen that coming. To me, this was attractive. Early March, 11, that's pretty extreme. But no, we had another leg down because what we didn't know, maybe Trump's friends knew, maybe Trump's family knew, but we didn't know, was that he was going to tariff the whole world and tank the market. So let's go to the charts. Zoom in, and we see what has happened this year. And you can see, right? Look at that. Boom. March, early March. We were down significantly, right? From December through early March, we had a boom, big correction, 18%. in the Russell. And guess what? We started to rebound off of there until the tariff tantrum. And that took us to these lows. But guess what? In just a few weeks, you were back to those early March levels. So if you bought more in March because we had extreme fear and we had money mark stocks that said the experts believe in this company, stick with it. The economy's okay, stick with it. Fear is at extreme. Warren Buffett says, be greedy when others are fearful. If you got greedy here, beautiful, because you should have, because fear was rampant. It only took you, boom, less than 2 months to be at break even from those levels. And then you also had a chance to buy more at these levels. And even from these levels, the market rose 26% in 7.5 months. That's 50% annualized. That will make you a millionaire. If you bought more in April, that made you 47% in 6 months. That's over 100% annualized. That will make you a millionaire. Okay? So, boom. The only difference between then and now is you see the difference in terms of where we are relative to the red line level. We were way below the red line level. We were way below the 200-day moving average. We were way below the 50-day moving average. So far, we're pretty close to the red line. We're under the 50-day moving average, cool, but we still got room to move in the 200-day moving average. So we have to continue to be cautious based on what's going on out there. All right. We're not going to spend too much time on this, but the 2-year yield, as I would have expected, is starting to tick down. We had bad labor report, fear that the economy is going into the tank. Well, though we've been talking about this for a long time, the K-shaped economy, corporations that are doing well, the AI economy, tech doing well, defense doing well, and the low-end consumer doing horrible. Okay? Companies that rely on federal government spending, Doge, kill that, doing horrible. We're going to show you charts. We're going to talk about companies that are related to both sides of this K during this broadcast until about 3 o'clock when we're going to go into Q&A. And I got my notes right here for my notebook and my pen to walk you all through this. All right. By the way, 42 Macro, who I pay them for their macro research, just cut Bitcoin to 0. I'm sorry, don't get mad at me. I'm just trying to help you. Okay. So we got the BTC, the Grayscale Bitcoin Trust. The one thing I don't like about that call is that Bitcoin's already tanked quite a bit. I would have liked that call a little bit higher, right? But just be careful, right? If you're looking for things to buy, Bitcoin to me is not one of them because 42 Macro is obviously not endorsing that move. They kicked it out of their model portfolio. Don't shoot the messenger. Bitcoin could triple over the next 2 years from here and everybody makes great money. But if it drops by 30% before it does that, I will have saved you money in between the lines. By the way, MicroStrategy, look at that, falling out of bed. This could be a real problem, not only for MicroStrategy, but also Bitcoin, because these guys are levering up their balance sheet, taking on debt, all kinds of structures and everything like that. And in an extreme case, these guys could end up in a situation where Michael Saylor might have to decide, I need to sell some Bitcoin to fulfill some obligations. And if that happens, it could be a domino effect. So let's think about that as a last case scenario because he is the ultimate Bitcoin bull. He'll do anything he can to avoid that scenario, but let's not discount it because sometimes you just got to do what you got to do. Be careful. I'm not saying that I wouldn't sell MicroStrategy at these levels if you're in because it's like, look, it looks like it's falling off a cliff, like the thumbnail for this video. Okay, that's not really the time. You don't want to chase a move down. I wouldn't be buying, but I wouldn't be selling at these levels if I held on much longer than I should have because you had the white line level back here. You see that? I've been following MicroStrategy for literally decades. Okay, and when it hit this top line level, this was a sign that it was overvalued. And yes, it could go higher, but the odds were against you. And what? And this is my white line, right? My line down 57%. Brutal. Remember Oracle? ORCL. Hit my red line. Y'all, if you didn't watch the video, if you didn't read the article, if you didn't listen to the spaces, you don't know the difference between a red line, a green line, and a white line, that's up to you. I'm not going to explain why you need to do it. I just told you to. Go read, watch, and listen with your notebook. But when this happened, let's zoom in, right? That 40% move, once again, I told you, this is a bubble in Oracle stock. We took the ride down a little bit. I got out here, but it just kept going. I hope you didn't buy on this move, because if you did, look at that, down 28%. That is a massive correction for a company the size of Oracle. But it's no surprise, because all that did was bring Oracle back into its historical range of valuation. Let's pull this back. And by the way, this is another company I've been covering for decades, dating back to 1994. I've been covering Oracle. In fact, it was a big basis. It was a big part of the reason why those institutions were paying the company that I started in 2004 and retired from in 2008. 4 years, multi-millionaire, enough money to live off of, because of these kinds of calls on companies like this. All right. So, this is the sort of thing you got to watch out for. You have to have the red lines. You have to have the green lines. You have to follow the rules, or you're going to be screwed. And no, I am not worried about the algorithm today. I'm going to be calling dummies, pussies. I don't give a shit today about all that. Sometimes Coach A-hole doesn't care about the algorithm. But please give me that thumbs up to hit that algorithm. For real though, hit the thumbs up. Okay, so next up. So we got risk reward. We got the yellow alert. We got Oracle. We got 42 macro. Mark Minervini, you think what you want about him. He's proven a lot to me. He thinks that there is a high chance that we break the 50-day moving average. He thinks there's a very strong chance that we go lower from these levels, maybe after a bounce, right? Because this is a pretty sharp move. Maybe a bounce and then a move lower, killing that idea of a Santa Claus rally. You see what happens here? This is the funny thing, because, hey, listen, I'm guilty of it too, right? Everything looked like very set up nicely. We're going into the strongest month of the year, November, blah, blah, blah. Strongest month, not every year, just on average. And when you're starting November from this level, an elevated level, there's a good chance you're going to see this move down. There's still a lot of buying pressure that usually comes in at year end. Okay, so I am still optimistic that we at least get a bounce before a drop off, if we're going to have one. You just got to be careful about what you buy in that scenario. So let's talk about stocks and what we can buy in this scenario. Oh, by the way, you can ask Perplexity or Grok or ChatGPT, why does the market keep falling so much in recent weeks? It'll give you a number of reasons here, and these are all good, right, thought processes for you to go through. I'm not going to go through it today because we've got way too much to talk about. I put it in my slideshow, and then too many things popped up. I got 2 sheets of paper this week instead of 1. So you guys go do that on your own. You don't need me to walk you through this. Let's get to Gatekeeper. A lot of you have Gatekeeper as your number 1 position. As do I. And why? 1, the red line is up here at 330, more than double the current levels. But there's a second red line. And that's because there's a good chance that this stock could go into bubble territory, because there's a federal mandate. The Federal Rail Association, FRA, has a mandate that all lead rail cars need to have the kind of technology that Gatekeeper has. Well, Mark, the kind of technology that Gatekeeper has, there's a lot of people with the kind of technology that Shut up. Yes, I know that, dummy. But here's the thing. If you do a search out there to see who's been winning the deals, Gatekeeper's winning them all. They got Philadelphia. They got Toronto. They got New York. Just Long Island so far, by the way. They got what we believe to be LA, could be San Diego, Chicago, Boston, All these other cities around the country, Houston, still yet to announce who they want to use for this mandated technology that has to be in place in less than 2 years. And if you're Houston, if you're Chicago, if you're St. Louis, if you're Portland, and you're looking out there and you're saying, geez, I wonder who I should use for this technology. What do you think it's going to mean to them that these cities that represent, like, if it's LA, right? Even if it's San Diego, but if it's LA, New York, Toronto, Philadelphia, those are 4 of the top 6 transportation in the country. Transportation agencies, metropolitan transportation agencies in the country. Okay? So why would you not go with who everybody else is going with? You're at least going to give them a serious look. In fact, Philadelphia told New York that Gatekeeper is who you want to use. All right, all that to say, well then, Mark, then why did they raise money? They just did a raise in our face. Raise in our face. The stock was down 25% and they still did a raise in our face. That's so bad. It's so bullish. Shut up. You're so stupid. You're so dumb to not write down the rules and follow them, to not know the difference between a bullish raise and a bearish. What a bullish raise and what the hell is a bullish? You don't know because you're stupid. Because you don't know how to write down. Either that or you're new. Because I've talked about this a million times. It's on Google. Just Google bullish raise Mark Ohms. You'll find it. Right? If you've never heard that phrase before, you're not dumb. You're just new. That's cool. But if you've heard that phrase before and shut up. I don't want to hear from you. Okay? These guys have had $7 million in cash, $25 million in working capital. Look it up if you don't know what that means. In other words, plenty. I've known the CEO for years. He believed that he had more than enough cash, more than enough working capital to fulfill all these deals. Toronto, New York, Philadelphia, LA or San Diego. To fulfill the demand for all these deals. So why? Why would he go and raise money? By the way, the largest shareholder in the company. Why would the largest shareholder F himself by raising more money if he didn't have more opportunity? I don't know this to be a fact, but it's the only thing, after 30 years of experience in the stock market, it's the only thing that makes sense. He didn't sell his shares in the open market. He didn't exercise his options and start selling shares. His shares are still in his pocket. His shares went down like ours did when he did this raise. So why would a human being do that? Simple. When a company doesn't need money, $7 million in the bank, $25 million of working capital, doesn't need the money, that means that he wants the money to elevate, escalate, accelerate his business even beyond what he thought the demand was a month ago. And that, my friends, can be nothing except bullish. You want proof? Let's harken back. Let's go back in time and reminisce on the days where Money Mark told you to buy Kraken after they did a raise, Money Mark. They raised money. It must be bearish. It's delusion. You're deluded. It's the delusion in your head of not knowing the difference between a bullish and a bearish raise, because Kraken, my friends, raised money under the same circumstances. Business going great, plenty of cash on the balance sheet, and then all of a sudden, the CEO, who owns a large chunk of the company, decides, I need more money. Not need, want. Because demand is higher than I could have imagined. And now I need more money to buy more inventory, to expand my facilities, to hire more people, to take advantage of all this demand that I see out there. And after that raise, which by the way was at 95 cents Canadian, I can go to the TNG, this Canadian, right? 95 cents. Boom. Right? That's 95 cents right there, that line. Okay? The stock went to $7.50. From under $1 to over $7. That's more than a 7-bagger for those of you at home without a calculator. A 633% gain, the box over my head, in less than 18 months. That, my friends, is the power of a bullish raise, and that's exactly what this was. Now, the reason I didn't come on here yesterday when the news was announced and to tell you this, jump on board, guys, jump on board, is because I felt that $10 million, it's only like 10% of the company, by the way. No big deal. Not less than 10% of the company, much less. That the stock would trade down to the deal price, which in U.S. terms, this is the U.S. chart, was $1.49. And I said to myself, damn, I wish I was an institution because I'd be all over that. I would have... If I didn't have any shares of this stock, I would be a 7-figure purchaser of this stock at $1.49 on that offering. Okay? Because it's a bullish raise. It's a 15% discount to the current price. I love it. I love it. But the stock opened at like 168. It traded down as I would have expected towards the deal price. Beautiful. Guess what Money Mark did? When it traded down to that deal price that he was salivating over the... Man, I wish I was an institution that could have bought at 149. All of a sudden, I can buy at 149. I bought at 149. And 150 and 151. I bought a lot more shares of this stock because of what I learned about so many others in the past. A bullish raise is to be bought. Okay? All else being equal. Now, all else isn't equal because the market is in a tenuous position, but you can either just sell everything and go into cash, or you can continue to buy great names at great prices and hedge your positions if you want to lower your volatility. And in the meantime, zoom in. We got a situation here where this stock is off of its highs. That's called a sale, ladies and gentlemen. That's called a sale. When things go on sale, you get excited, right? Black Friday sale, the stock is almost 33% off of its highs. It's a third off sale on a company that has tremendous demand, basically guaranteed for the next 2 years. And by the way, the volume yesterday, this is in dollars, not shares, $5 million. Half of that entire raise changed hands in that one day, okay? And the stock didn't break the deal price. That tells you something. That means that people were waiting for that deal price, salivating over the possibility, the opportunity to buy at that price. And I found out through back channels that, oh, by the way, the deal was oversubscribed. What does that mean? It means that there was much more demand, much more than $10 million of demand for the shares. Well, then why didn't they charge more for it? That doesn't work that way. Okay, this is the thing, like a lot of you guys hallucinate and make up things in your head of you imagine how things must be instead of actually finding out. This is what really pisses me off, you freaking dummy in my WhatsApp group. Stupid. I should have kicked you out immediately. I'm in a bad mood this week over the stupidity I see. By the way, a lot of you don't even deserve this speech, so I'm not going to give it to you because the vast majority of you have your notebook, have your pen, learn the lessons. You're doing what you're supposed to do. You're losing money right now. Of course, we all have to take bumps along the way. 2 steps forward, 1 step back. 2 steps forward, 1 step back. 1 step back is losing money. Dummy. But if you don't follow the rules, you're going to lose a lot more than the rest of us. And then you could go nowhere. I know so many people that have made a lot of money. Oh, Mark, I'm making more money than you. And then you don't hear from them again when the market goes down. You know why? Because they got wiped out. And I find out through back channels later, yeah, that dude got wiped out. He didn't just lose his profits. He lost what he started with. Now he's starting from zero again. I never want to do that. And you should never want to do that. because you don't have to. You don't have to take those kinds of risks. You don't have to gamble, because all you need is knowledge. If you know what you're doing, you can keep making money at it. All right? I don't have to, let's keep going. What else do we got here? So bottom line, Gatekeeper is still my largest position, larger now than it was before. There are some names that are challenging that. Maybe we'll talk about that today. Maybe we won't. But let's go back to, let's see what we got in the tabs for today. We talked about that. We talked about that. All right. TSSI. Oh, no, Amplitude, another AI name. We'll talk about TSSI coming right up. They have earnings next week. IDN, IZEA, TSSI all have earnings next week. We'll talk about that. Okay. As well as AI, and anything you guys want to Q&A me, put a question in the queue with a question mark in front of the question. If you didn't put a question mark in front of your question, go back and edit your question and put the question marks at the beginning, or ask it again at the end of the chat, because I'm going to skip over it. I don't care if your question mark's at the end of the question. I'm looking at the beginning of the post. That's how I quickly get through these things. And don't use a question mark to say something to me that is not pertinent to a Q&A. Don't get my attention with question marks. I will kick you off of the broadcast. You will not be allowed to ask any questions or comment ever again. I don't play that. This is a place to be professional, right? I be funny. I do the dummy routine. Coach A-Hole is here. That's for entertainment, so you guys can enjoy this stupid. Duh. Right? Who wants to listen to 2 hours of boringness? So I got to make it kind of fun, but I make it fun, not you. You keep it professional. All right, Amplitude announced very strong results. Okay? Remember, I knocked them off of my official portfolio because of concerns in the marketplace regarding confusion over AI, what it might mean for this company, especially because the software that they have and the AI that they have incorporated now into that software creates a dilemma for the buyers of this software. Traditionally, the buyers of the software buy the software, they use the software. But once they put AI, once Amplitude put AI into their software, now all of a sudden, the buyer of the software, when they look at the software, they say, wait a minute, if I buy the software, the AI is going to start doing my job. It's going to start doing the job of people on my team, the guys that I go out with on Thursday night for drinks. I like those guys. I don't want those guys to get fired. Oh my goodness, should I buy this Amplitude or not? And all of a sudden now Amplitude has to shift gears. They have to have a good story to tell, right, to that buyer. And maybe even escalate it to the CFO. Oh, by the way, your potential buyer is afraid of losing his job because this will help your company save money, Mr. CFO. I don't know how they're going to solve the problem, but I do think they have a little bit of a problem there. I've been hearing it from different channels. Okay, so we got to be careful. I took the money off the table. It was close to $12 a share. Now it's closer to 10. So, right? That's worked out so far. They announced good earnings. Not a big surprise because these problems that are cropping up that I'm hearing about are recent. So the deals that were already at the finish line this quarter, sign it, seal it, deliver it. No problem. Those people already made their decision. They were far along. They were in negotiations. No problem. They were at peace with what they're going to use the software for. But the people in the pipeline, the people that are looking at this for the first time, that are testing it out, that are requesting a proposal, they are still the most likely people to be uneasy about the outcome. That's called your sales funnel, your pipeline. Okay? For those who don't know, it's very important. In fact, it's the most important thing about any one of your stocks is their sales funnel. The front end of that sales funnel for Amplitude is got some shakiness to it, right? So I feared guidance might be rough. It wasn't. They had good guidance, good earnings, etc. But Wall Street covers this company, and they know about that shakiness on the front end of the pipeline. So it could be a few weeks or a few months from now. I was able to call the internet bubble burst, right? When the internet bubble broke, back here, one of the reasons I was able to open my own business and get Jim Cramer's money, George Soros' money, Stevie Cohen's money, is because I called this burst within a few months. Okay? Accurately. Not just a good guess like a blind squirrel or a clock that's broken, but with real facts, because I saw the front end of the technology funnel broken. And I told them in November, the front end of the funnel is broken. So in a few months, the back end of the funnel is going to break and revenues are going to fall off a cliff. 4 months later, that's exactly what happened. Okay, so we have to be careful of situations like that. That's why I got us out of Amplitude. I still really like this company. Okay, if you own this company at 10, I'm not selling here. At 12, I was a seller. At 10, I'm not a seller. All right, so if you didn't get out when I said to get out, don't get out now. You're chasing the move down. Okay, but as it gets lower, it becomes a better and better long-term buy and or hold. Because even if they go through a rough patch, they should come out of it because they are unequivocally the best at what they do. You can ask AI what they do. I'm not going to go through it here because we have a lot to talk about. But they are the best, and you always want to buy the best in an industry that is growing, and what they do is absolutely a growing industry and absolutely necessary for society and the way that we are moving in this e-commerce world, and growing demand. And they're adding AI to make it even more of an ROI for people who buy it. So I like Amplitude for the long term. I'm still cautious for the short term. Let's keep moving. Let's do something boring for a second before we get to TSSI. I got Infuse Systems here. So we got 2 tabs, and then we got TSSI. We got Curiosity Stream, an AI video dealer. We got a bunch of names. Bunch of AI to talk about, but let's just get through these last 2 tabs. This is going to be very quick, by the way. What do we care about this? I've never mentioned this company before, and I'll never mention it again, so don't ask me of the charter on that. This is a comp, a competitor, or a comparable. Okay, they're not really competitors, they're really comparables to TPCS. Okay? And you see TPCS, one of the rare stocks that are up pretty good today, 3%. Maybe because people are putting 2 and 2 together, that the defense industry is consolidating. And Gulf Island Fabrication is a fabricator in the defense sector. TPCS is a fabricator in the defense sector. And I've told you before that ultimately I think TPCS will get acquired, because I expect this industry to continue to consolidate. The supply chain, part of the problem that the government has, not getting the submarines they want, is because the supply chain is too dispersed. Too many people make too many parts, and if one of them F up, the whole thing comes to a screeching halt. So they need to consolidate. They need to be less players in the space. So buy up all the little guys so that one guy can have a lot of the blame, right, if something goes wrong, which means they have a high incentive. Bigger companies are less likely to make big mistakes. So you consolidate the little guys into a bigger guy that has better execution. Here you start to see some of that happen right here. And what is this ticker symbol? Giphy. Look what happens to a boring stock when a larger company finds the value in them. Shabam! 50%. Okay? A 50% buyout premium. Right? Not such a boring company after all. So these are the things that can happen. Right? We could wake up on Monday and TPCS is acquired. I don't think it's going to happen. Don't bet on it. But I do own the stock. And there's a reason why. Because here's my risk reward range. Right? They're not operating on all cylinders. If you don't know what that means, watch the video, listen to the spaces, read the article. But what we have here is a company that's approaching its 200-day moving average. It's significantly below its 50-day moving average, so that significantly word is important. When you're significantly off of your moving average, that's when you bounce. Significantly off, bounce. Significantly off, that's an opportunity to bounce. Do we go to the 200? I don't know, but look at how attractive the charts looks. So if you don't have TPCS, this is a good time to get TPCS. See the theme here, by the way? Right? I'm not anxious to tell you, buy all stocks, the market's going up. I don't know. I'm not God. But what I do know is some of these stocks are on sale. And if it's a good stock, right, with a good setup, the government is going to buy submarines no matter what. In a recession, they might buy more because what does the government do in a recession? They prop up the economy by printing money and spending it or giving it away to us, right? During COVID, right? And so we could see a situation where this stock that is now on sale, 28% sale, Gatekeeper, 33% sale. These are opportunities, friends, because you see where it is in the long-term risk-reward range, right? This is what you're looking for. A company that is way off of its moving average, way low in the risk-reward range, and has great opportunity that supersedes problems that might erupt in the marketplace. Okay. By the way, don't chase. Is this like, if that's me, that's not supposed to be me. All right. I disavow any, I might sell into this. All right. I always like to make sure that's known to cover my ass. I'm using swears today. My apologies to those of you who don't like swears and don't think it's professional. Today, Coach A-hole is around. So we go back next week to the nice, money mark. But today it's a Coach A-hole. All right, final tab before we go into my notes, before we talk about TSSI's earnings and what do I expect about TSSI's earnings, as well as many others. I got other AI names on the list. Oh my God, it's too much. And we're only 9 minutes till 3. We're going to have to speed it up. This article, read it. Let's just look this up. Aaron Warwick, he did a great job in this article. He's been doing a great job on this stock. This company has done a very good job of turning itself around under new management. And that's all I really need to say about that. Except for, I don't know if it's said in the article, but what I will tell you is this company is now back in the good graces of the Russell 2000. What does that mean? It means they got kicked out of the Russell 2000 because their market cap got too low. But because of their execution, because they put up some good quarters, their stock has risen where it's they're very much perfectly in the Russell 2000 range, right? So come January, you're going to start seeing ARBs and institutions buying this stock in anticipation of them getting back in the Russell. This is what happened in 2020 when that happened. 2020, 21. Okay? The stock went way further than it belonged because Russell demand is forced. It's mandated. The institutions have no choice. They have to buy the stock. And if nobody's willing to sell, they have to buy at any price. And so that's what they were doing. They were buying at any price back here. And if that happens again, the stock could go cuckoo again. So this is another great name to kind of take a look at. It's had a nice run. So, I'm not like going to pound the table on it, but it's been sideways for a few months. So that's a good consolidation is the word for that. Putting in a notebook. If a stock spends 3 months, right, consolidating a move, it had this big spike up and spent the last 3 months digesting, consolidating that move, that gives you the wherewithal to say, okay, I'm glad I didn't buy on the spike 3 months ago because that would have been 3 months of me waiting for something to happen and nothing happened. Over the last 3 months, we made a lot of money in stocks, Jack. That money went to waste in Infuse Systems. But now it's gone nowhere for a while. They put up another good quarter. Okay, we can start thinking about, right? And I do now have a larger position in Infuse Systems as a result of that. Not huge. It's not an official pick. None of that stuff. But I want to keep you guys informed of everything that I can give you because you need good ideas in this market. All right? There's your chart right there. Keep in mind, it's not red and green lines. It's white lines. And if you don't know what that is, watch my video, read my article, listen to my spaces. All right. And give me that thumbs up for real. Okay, let's see. What else we got? TSSI. Earnings coming up. We took care of that. See? Notebook, pen. Helps everything. TSSI. All right. This is a tricky one. What to do with TSSI is a tricky one. You guys already know, so I'm not going to take you through it all. I am very skeptical of their long-term health because they are basically Dell's bitch right now. 97% of their revenue comes from Dell, and Dell in May launched a facility that's 3 times larger than TSSI's new facility, and TSSI's new facility is 2 times larger than their old facility. So Dell is huge, became a huge competitor to their own partner, who is 97% reliant on Dell. But look, a few things can happen here. All right. Number one, with the stock back down here at these levels, okay, we got, remember the technical lines, but technically low. If we get a bounce in the market, I think there's a good chance they put up a good quarter for 2 reasons. One, Q3, the September quarter that they're about to announce, was the federal year end. At federal year end, money gets spent. All the rest of the budgets get spent. Okay, that's very good because Dell has a massive federal business. TSSI processes a lot of that federal business. AI is off the chain right now. So even though I am skeptical of their long-term health because they are Dell's bitch, and if they can't find a way to expand beyond Dell, which they haven't yet, they might. Good management. But they haven't done it yet, which means we could get rained on before the game starts. I'd rather show up in the second inning. Remember that rule? Better to show up in the second inning than to get rained out. No FOMO. We got a nice setup here, right? So if the market rebounds, we got a good chance for the stock. I haven't bought any as of yet, by the way. I don't think I have. I'll double check. I'll let you know for sure. I think I want to get closer. I want to see how the weekend plays out in the stock market and get closer to the actual earnings result. No, I don't have any TSSI at this moment. If they announce a great quarter, I do think that it'll probably be good guidance from there, because Q4 should also be good because that's the corporate year end. And that's when corporations spend all the rest of their money for the year. Okay? And so I've been saying this even since back here where I became the bad guy. Remember, I was the good guy? I was like the second guy on TSSI, Maj at Geo Investing being the first, but I was the first to prove that TSSI was in XAI through Dell. I was the first to prove that Elon was doing business with these guys when the stock was 2, before it went to 20, before it went to 30, which was too much. I told you it was too much, and now it's 16. So I hope you listened. At 20 and 30, because it's below both of those numbers now. Just follow the rules, hashtag notebook pen, right? We could see a nice year end for these guys, okay? So regardless of my long-term view, which they have to prove themselves on, we could have a good short-term period of time from these levels. So take that for what it's worth. All right, we'll have some more AI for you as the show goes on, but I wanted to give you that one. We have 2 other earnings coming up this week, also to do with AI. All right, IDN, an official pick. By the way, the only official pick, is it? It's on the edge. I picked it at 420. My last 14 picks are all up, except for IntelliCheck. Oh, it's 421, so it's up a little bit. We're a penny above. All right, so that's not updated. That's actually up a little bit. Their earnings are coming up next week, and from what I've gathered, we should expect a good earnings report. We don't have Facebook yet, but we have definitive proof that Facebook is doing all they can to launch IDN's product on their platform. And if and when that does, I will bet you a lot of money. I mean a lot of money that the stock goes up. Because IDN, we can go to Ticker. Great website. This is not an advertisement for Ticker, but I will tell you any service or product that is good, for free, I will pimp those services. Ticker deserves for me to pimp this service for free. They don't know who I am. But this is a great service. IDN, all I want you to see, so we don't get bored, so we don't belabor the point, is their annual revenue is only $20 million. If and when Facebook comes online with the product that they want to use for IDN, It's going to instantly add 3 to 5 million per year to this number. It's going to instantly add Facebook to their customer list. It's going to instantly make them more attractive to other companies like Facebook, TikTok, Instagram. Oh, Facebook, Instagram, yeah. Right? Sora. And so what does the stock do? The one customer alone, never mind it being Facebook, should send the stock higher. And then winning other deals can send it even higher. And that's why the risk reward chart looks like this. Let me pull. Oh, there we go. There's the pullback. My bad. Right? That's why the risk reward chart looks like this. And that's why we're low in the risk reward chart. And by the way, on the daily chart, we're at the 200-day moving average. Right? All else being equal, that's a nice support level. So we got a nice support level. We're low in the risk reward range. And we got earnings next week. And I can't guarantee anything, but you notice, if you check your notebook, a lot of times when I make comments on how I expect earnings to come out, most of the time I'm right? So we've got a nice setup here. If the market rebounds, if they report good earnings, and all else fails, the valuation is low, so your downside risk is much more limited than the upside potential. These are the names that you want to be looking for in the marketplace when you go shopping. And by the way, let's see how much of a sale it's on. IDN is on sale to the tune of 33%. 33% on sale. Okay. Boom. So there's that one. And then lastly, we have IZEA announcing earnings next week. I don't have any reads, positive or negative. I just don't know. That's okay. Right? Most of the time I don't know. Most of the time I don't have reads. But what I do have is a growing relationship with the CEO, young relationship. I've spoken to him twice. Looking to speak with him again, okay, which will probably happen after the earnings call. We're lining up the call as we speak. And I expect continued execution, all right? I don't know what EPS will be. I don't know what revenue will be. I expect the earnings call to demonstrate that this man who worked for an absolute legendary firm, this guy is bringing heavyweights from a legendary ad agency into his firm. Why would they leave a legendary agency to work for a little pissant company like this? Simple, stupid. Because when you work for a large company, you're just a little guy in a big pond. You don't mean much to them. But if you become a big fish in the little pond and that company gives you stock options and says, if you can drive this stock to $10, right? Never mind more than that, because this line could go up if they start executing. If you can drive the stock to $10, you're going to be a multimillionaire. You will never be a multimillionaire over there because they don't need to make multimillionaires out of you. And by the way, it's going to be fun because you're going to be the boss. I'm the CEO, Patrick Venitucci, great guy so far. And I'm going to let you do you because I know you do you well. I know you know how to sell deals. I know you know how to attract customers. I know you know how to take the customers that you had over there and bring them over here, making this company bigger very easily. I've seen it happen countless times over the 30 years in the stock market that I have been doing this. Okay. So, this is, and by the way, the risk reward on this is crazy. Because this company at $5 has $3 in cash. So you're not paying $5 for the stock, you're paying $2. The other $3 is in cash. There's a buyback in place, by the way. Okay? But you're really only paying $2 for the stock. And Wall Street's best analyst on this name, per the CEO, the guy who knows the company best, has an earnings estimate, I think a price target of 10 and an earnings estimate of 60 cents for next year. That's a PE of 3 on that $2. Okay? So that takes so much risk out of your $5 purchase because this stock really, if you're profitable and you have $3 on the balance sheet, your stock pretty much can't go below 3. The market would have to tank severely to drive a stock below 3 when they have $3 in cash and they're profitable. That's just common sense. The more money they make, they made 10 cents last quarter, right? If they make another 10 cents this quarter or next quarter or whatever, then they won't have $3 of cash. They'll have $3.10 of cash. They'll have more cash and a greater floor. And I'll have to raise this line higher because they're creating a higher floor. What I expect, though, is for them to take that 10 cents and buy back shares of their stock because they're confident, Patrick and his boys from the legendary firm, that they can make this company bigger because they're already blowing the doors off with Warner Brothers. You know, the company that made Barbie, Superman, F1? Because Isaiah ran the social media influencer campaign for Barbie, Superman, F1, and they're killing it. And they have a platform, right? And this is a good thing that the founders did. All these losses going way back. This is from the founders spending tons and tons of money to build a multi-tens of million-dollar platform that creates a barrier to entry. You and me cannot get into this business, not only because we wouldn't know how, because we're not experts on this industry, but because you need a platform to manage the millions of social media influencers out there. For the F1 movie, Isaiah went out and found the best 250 out of the millions of influencers out there for Warner Brothers. Warner Brothers doesn't know how to do that. Isaiah does. So they hire Isaiah to do it. Isaiah, go out and find the best 250 influencers out there. I want them to crash the red carpet event of F1. Brad Pitt will be there. They can make all kinds of video posts, this, that, and get our movie trending. And guess what Isaiah did? They found the right 250. They contracted the right 250. They orchestrated, they measured, they mapped, they made sure that everybody did what they were supposed to do, and they got that movie buzzing. Great movie, by the way, and it did very well in the box office. No small thanks to this little company that nobody knows about, Isaiah, who has $3 of cash on a $5 stock. I really don't care what they do this quarter, to be honest. I care about some others. This one isn't one of them. I care about how TSSI does this quarter a lot. I really care. I don't own a share, and I care a lot about how they do this quarter because it's going to be very instructive of what's going on there. This company, I got no problem. If it's a great quarter, great. If it's a bad quarter, great. Because these guys being small, they're going to have up and down quarters depending on what they are dealing with in that particular quarter. But what I do know is they got heavyweights from a legendary firm. They've got multi-decades of experience in making a business big. And I think they're going to make this business big. This is just a $30 million business. I don't see why they can't make it a $100 million business. And at $100 million, they will be generating something like $20 million of profitability, bottom line profitability. By the way, they're not going to be paying taxes for a while because the old management spent so much money that now they have what's known as net operating loss carry forwards. Okay? If these guys drive $20 million to the bottom line and get a 15 PE on that, that's $300 million of market cap. At that point, they probably have over $50 million of cash. That's a $350 million market cap. What is their current market cap? IZEA stock. I just gave you some math without even knowing off the top of my head what their market cap is. 84 million. For 84 million to become 350, the stock has to go up more than 4x. So as you can see, these risk-reward lines don't reflect the possibility that this stock could really go much higher over time than just 10 bucks. Okay? Because I don't see a reason why this company can't expand to 100 million. I don't see a reason why they can't get to 20+% operating margins, and therefore I don't see a reason why they can't get to a $350 million market valuation. Not going to happen tomorrow, right? But we're not here for tomorrow. We're here for buying a stock at 5 that can go to 20, even though they have $3 of cash. That's very little risk and a lot of potential reward. All right, we're so far over 3 o'clock, and I got so much more to go. So I think we're going to have to go into we're going to have to lightning round some of the stuff. Some stuff I'm going to have to leave till next week. I'm going to leave that till next week. CXDO, they had great earnings. Like I said, I told you. I mean, the market knocked the stock back down if you ask me, because they had phenomenal results. Everything I said happened. These guys are doing such a great job. They grew 12% year over year, but software growing like 28% year over year. More importantly, their long-term obligations, these are long-term contracts, grew 14%, which means their book of future business is growing faster than the current business that their revenue that they're recognizing. That's bullish. That means that the underlying foundation of the company is actually accelerating. Okay? Their renewal rate, when they have a customer paying them $100,000, the average $100,000 customer is renewing for $100,000 and not going away. Okay? That's called a dollar renewal rate. Do they lose customers? Sure. Everybody does. But when they lose a customer, another customer raises, right, from 100,000 to 120,000. And if you get 5 of those, it makes up for a lost customer. And they're not losing many customers. In fact, they're stealing customers from Microsoft's old business, Metaswitch, which they gave up and sold off at a fire sale, and Cisco. They continue to steal those businesses away. Okay? They won another customer away from the old Microsoft product this quarter. What else we got? Oh, and 78%. So 78% of their revenue is recurring. Okay? So year after year after year, you have a 100% renewal rate on 78% of your business. There's not much of your business that can go down. And you have growth. And it's all lined up in these long-term contracts. And they have, I told you about this, the AI receptionist. Okay? The receptionist that will answer the phone instead of a human. And I got pricing on this. And it's crazy. Their introductory pricing on this is going to be a whopping $99 a month. Okay? For larger companies, it could be closer to $500 a month. But what receptionist on the planet, human receptionist, are you going to get for $99 a month? You're probably paying them $99 a day easily, right? 8-hour day, $12.50 an hour. You're not paying a receptionist $12.50 an hour. You're paying them a lot more than that. More likely $25 an hour. That's right there. That's $200 a day. They're going to charge $100 a month. I feel bad for the receptionists out there, but there's going to be a lot of receptionists losing their job to this AI. There's a lot of people in general that are going to lose money to AI. Okay? And we can't stop that. The best thing that we can do, like if you have a receptionist in your family, the best thing you can do is take advantage of that by investing in the companies that are going to win from that loss. And then you can help your friends and family members who lose their jobs with the profits that you get from this stuff. All right? What that represents, by the way, this is going to go on to for their retail accounts. And their retail accounts represent a good 50% of the business. I don't know if it's 58% or 48%. 50% of their business, right? Those accounts, the low-end accounts, this will add 40 to 50% to the current account value. Okay? So the average small account might be only paying them right now $200. This is going to add a whole $100 on top of that. Imagine a massive chunk of your installed base, a massive amount of your customers growing 50%. And in most cases, you'd be like, well, if that happens, that's not going to be easy. Well, in this case, it sounds really easy, doesn't it? That you get to replace a receptionist that you pay $200 a day with a product that you pay $100 a month for. Okay? For the larger customers, it's not a 50% bump. It's more of like a 7% bump. But a 7% bump, right? If you're paying $100,000 and now you're paying $107,000, that's a 7% jump. That's a dollar renewal rate of 107%. The current corporate average is 100%. So we're seeing AI applications start to increase the future of this company. And by the way, this is a platform, right? This is I was at their user event and they had a lot of partners. There's a lot of companies out there that look at this platform and say, damn, I could develop a software product, maybe an AI product that bolts on, that latches on, that connects to Crescendo's platform, and I'll have a nice business. And Crescendo says, we like that idea. And what they'll do, Crescendo can either buy the product or offer a commission on everything they sell, or take the product. There's a lot of ways that they can partner with those software developers and say, yeah, and they did that in this case with the AI receptionist. They didn't develop it. Somebody else did. Somebody that had all the technical know-how to create an AI receptionist and said, hey, Crescendo, can we partner on this? And Crescendo said, hell yeah. It's like Nintendo, right? Nintendo's the platform, and then the game makers, right? They make the games, they give Nintendo a cut, they make money, Nintendo makes money, but who makes the most money? The platform provider, right? Because they own the platform, they get a cut of everything. Think the iPhone, right? 30% on every app comes, right? They're the gatekeeper. So I was very impressed with the quarter. Congrats to them. Great guys, so they deserve it on top of it all, but also more importantly, great operators. By the way, one of the analysts on Wall Street, actually 3 of the analysts on Wall Street raised their price targets, 2 of them from 8 to 9, one of them raised it all the way to 10. Look at that. No surprise to me because I do math, just like they do, right? And we're sitting at 650. So that's a 50% move that we can see in the stock. If we get a break out of this, we just need to break out of this wedge, this consolidation I told you about earlier. Look it up in your notes from a whole 20 minutes ago. This big sharp move that this stock made here, 460%, not a boring company, but they had to consolidate that move. They've been doing it for like 18 months or so. A break out of this wedge will send the stock ripping, because when you see a consolidation pattern that lasts this long, the rip out of that channel is usually aggressive. So I can't guarantee it. I'm not God, but the setup is phenomenal. We are still well below, we're in a very nice area of the risk reward range. We've got a company that's executing very well, that has recurring business, booked business, contracted business going out several years. That is a margin of safety in the event that there is an economic pullback. Okay. Anything else? Oh yeah, they have other things that they can do. They got storage. Companies need storage for what they do. Crescendo's working on providing that, charging extra for that. Call recording and summaries. I know everybody does that, but if you integrate it right into the platform, then they can earn their share of the market from there. Going to go from 0 market share to something market share. That going from 0 to something is more revenue. There's so many avenues for growth for these guys. And last but not least, they are adding a new user interface to make this look a lot more slick. All right, and that's going to help them win new business too. So that's about it. Current enterprise value, 173 million. That's only 10 times 2017 EBITDA. Okay, for a company that recurs revenue, that is continuing to grow software at a high rate. So this one, I raised my position size on this one this week on those results because I thought they were great, and the call I had with management afterwards, which I thought was great. All right, very quickly, we can go over this more next week, but I'm going to do this very quick because we are way over time on the first half of the show. Let me go to what we got here. K-shaped economy. Be careful, because if we continue to see job losses, then this, right, the low-end consumer will continue to lose their jobs, lose their ability. Right? Receptionists, for example. If a receptionist loses their job to Crescendo, Crescendo benefits, upside part of the K, the receptionist loses money. What now happens to that receptionist? He or she can no longer afford to go to Kava. He or she can no longer afford to go to, where's my list? Twin Peaks, which I like. I like Twin Peaks. They also own Smoky Bones, I believe. But look at the chart. Look what's happening to these companies that are levered to the low-end consumer. They're getting smoked. I wanted to give you a better chart there. There you go. Right? So that's Kava. That's Twin Peaks. Sweet Green. Remember that one? This was a stock I shorted. Okay? I mean, my Lord. From 45 to 5 in less than 1 year. That's the K-shaped economy. Be careful. Real quick, Nike. Be careful, because if the economy gets worse, if job losses get worse, then there's even fewer people that can afford this stuff. Lululemon, right? I wouldn't be shorting them at these levels, mind you, right? Because look, like this is at the bottom of its long-term channel. Bottom of its long-term channel. If you are a long-term investor, if you are willing to ride out the next 12 months, right? Because if we go into a recession in the last 6 months or something, maybe it takes 3 months to go into recession, 6 months for it to resolve itself, blah, 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 blah. Then maybe it's until next year that we start seeing a recovery in the stock. I can come close to guaranteeing that Nike stock will be higher than $60 at some point in the future. Okay? You just have to be willing to ride out whatever happens next. And I don't know, it could go straight from 60 to 70, 80, 90, 100, or it can go to 50, 40 before it goes to 70, 80, 90, 100. If you can ride that out, if you have a long-term perspective, this is a closet stock, a stock that you could throw in the closet for the long term. And it's at a price that you haven't seen since the Great Financial Crisis and the 2000 burst of the internet bubble and the recession that I knew all too well when I came out of college. I couldn't get a job for 11 months. Okay, so there's only 1, 2, 3 times in history since 1990 that we've seen this occurrence, and it's happening now. I just can't guarantee that this is over yet, that this is about to blow over for them. But great closet stock. Couple others real quick, and then we go to Q&A. On. See, I can't say this is a closet stock because they haven't established themselves like Nike. Okay? We have a lot. Have you noticed? Nike was like almost a monopoly out there, right? You have to have Nike hat, Nike shirt, Nike shoes like I still do. That's what that's my track outfit, right? And now all of a sudden people are buying, the on shoes, what are the others? The Hoku shoes. There's a whole bunch of shoes out there. By the way, Deckers, right? Who owns one of those brands? Crashing out. Okay? Because that receptionist won't be able to afford a new pair of Nikes if she loses her job, if he loses his job, right? And we're even seeing it now in Celsius. And this is the last one we'll talk about today before Q&A. Oh, no, we have one more to talk about. We got another AI name before we go to Q&A. And it's a good one. But announced earnings, stock got smoked. Look at that. 30% in 2 days. What happened there? Remember when it got close to the risk reward low? When I told you, right? I don't know if it'll get to the low, but this is a good time to start picking at Celsius. Well, boom. I told you that Pepsi would want to get closer to them. 200%. Oh my God. Beautiful. In less than a year, right? But as this was happening, it got closer, right? Didn't get all the way here, but despite the K-shaped economy, it got this far up the risk reward range. And the last time I talked about Celsius, if you look in your notebook, you saw that the acquisition that they made, I believed, was a little defensive. Because that company, what is it called? You guys can help me. I'm not going to waste time looking for it, but let me see. Yeah, I will. Alani Nu, okay? What I told you was Alani Nu was building market share in the marketplace. They were capturing a segment of the market that partially were Celsius buyers, okay? So my problem with this ascent was not that it wasn't deserved to some extent, because from this level, they had to bounce. They had to move higher. But I was concerned that they had to buy Alani, that they had to pay a premium for Alani to be defensive, to protect their market share in the marketplace, because Alani was threatening it. That's not good. Okay, and we're seeing a little bit of that here, that K-shaped economy coming home to roost there. All right, let's get that last AI name in there, and then, I'm sorry, but we only have 30 minutes for Q&A this week. Curiosity stream. Listen, this chart looks ugly. There's no sugarcoating it. They broke my lines. I had to move my lines, and remember, there's the technical lines, not fundamental lines, all right? But this company, to me, is continuing to execute. They are basically the deal maker, the middleman between content producers, they're a content producer themselves, and the hyperscalers for making deals for video content for these LLMs to train on. And if you've noticed, right, if you go to Grok, if you download Grok, if you don't use ChatGPT or Perplexity or Grok, please, for the last time, not the last time, I'm sure, download one of those or all three of them, try them all out. It's brilliant. Like, it makes your life easier. Grok in particular has a button right on there at the front end of their application that says create videos. And when you click that button, you just upload a video. A picture. Take any still photo. I took a picture of my mom when she was 15. I think I told you this week. A picture. Put it in there and it create video. And what it did was it looked at my mom's face, right? Understood her hair, how it might move, all that stuff, and created a video of my 15-year-old mom looking around, flipping her hair very delicately, and it hit me in a different way than that photo, because like a 15-year-old picture of your mom, I was like, that's my mom when she was 15. Wow, that's crazy, right? But then it's even more crazy when you see her move, give a little smile, This is becoming big. AI is getting better at videos, but it's not perfect. Not even close. And that means the hyperscalers, they see what's happening. That the creation of AI video content is blowing up. And these guys want to be the winners. OpenAI wants to be the winner. Grok wants to be the winner. Everybody wants to be the winner. And the only way you can be the winner is license more content and send that through the LLMs. Okay? And so they need Curiosity Stream to continue making deals for them. Hard to say where this turns out, right? But not an official pick. I own a good chunk of the stock. My position size has increased as the stock went down. Stock's on sale. What percent? 48% sale on Curiosity Stream. So regardless of what the market's going to do next, the trends are very positive for this company who's doing a great job. I've had plenty of people that have given me input on this company, so it's been vetted, right? I wouldn't pick any other company that does this except this one because they're the only ones where I'm getting that expert knowledge from. All right? Okay, that's it. We're going to talk about a couple other names that I tweeted out next week to save time because I actually have industry expertise myself on some of this stuff. By the way, Curiosity Stream's earnings next week on the 12th after the market closes. Okay, so boom. And by the way, the CEO, very aligned. A big part of his pay package is tied to performance of the company and its stock. All right, let's go to Q&A. We'll put TSSI up there as the chart that we start with here. Hey, and by the way, right, once again, a zero to hero, a guy that started with absolutely nothing, lived in a basement, was near homeless, mentor saved me and turned me into a Wall Street monster, guy that got paid by Jim Cramer for my picks, retired a multimillionaire, live in Miami Beach, could be on the beach right now. And instead, what do I need to do? In my soul, spend 2 hours with you per week with no advertising, no sponsorships, no advertisement, no nothing, no tricks. I'm just here to help you because colleges rip you off. CNBC rips you off. They're not in it for you. Colleges don't make money off of your success. They make money off of your tuition before you become successful or a failure. They don't care because they already got your tuition money. You see how many people are in debt in colleges because colleges are country clubs. They're not places of education. I did not learn a tenth of what I needed to know about stocks in school, and I went there to learn about stocks. Rip off. CNBC, they're only there for your eyeballs. They get paid, they make money off of advertisement, not you making money on stocks. Advertisements. And you make money on advertisements by getting the most amount of people to watch your show. So you will say anything to raise your viewership and keep them watching. It has nothing to do with success. I'm here to help you with that. And if you like that, all I'm asking for is your thumbs up. Let's go to Q&A. And by the way, if I skip your question, put it back in the queue and I'm sorry. But with the question marks, hopefully that'll help. How many cylinders is Celsius on? We just went over that. I mean, I can't tell you exactly how many cylinders it's on. You know, I'm not an expert on Celsius and what they do. I've got some good contacts, so I share. You know, this looks about right, but I'd say with risks, because if the economy gets bad, then less people with less jobs, less people going to the store during the middle of the day to get Celsius to have energy, because you don't need energy, you're at home collecting unemployment. You know, there's risks here. I'm not getting involved with Celsius at these levels, even at these levels. All right, and I certainly would have been a seller up here if I hadn't already sold from the nice first spike that we had back there. Right, get the low-hanging fruit, hit those doubles off of the big wall, the big monster, Fenway Park. Former Boston guy, Wade Boggs, Hall of Fame. All he had to do was hit 50 of those things off the wall. Very easy. Just get your bat in front of the ball and it goes there. You don't have to swing for the fences. That's how you end up with a 200 batting average. Nobody remembers you, Dave Kingman. But they remember Wade Boggs hitting 50 doubles off the wall. That's how you become a multimillionaire, a Hall of Fame investor. Next question. And we're going to make it all lightning round as much as possible. I remember you used to hedge with SH. Do you still do that, or do you only focus on RWM? Rice, F you. Stupid. Get a notebook. What a moron. Other than Indonesia, is Intermap working on any other geographies for new contracts? Yes, a lot. There's a Malaysia deal out there. There's always the United States deal out there. Look, what they do is applicable to any country around the world. I've told you many times, and cool beans. 2 morons in a row. Where's your notebook, cool beans? I've talked about this before, cool beans. How many times? How many freaking times am I going to have to repeat myself for your dumb ass? What an idiot. And I love Mundo del Harvey. He saw it coming. I can't wait for dummy time. Right after that, as if he knew. AI hyperscalers want to build a 3D Earth, and Intermap makes 3D Earth. Countries around the world need 3D data. Thin, stupid, idiot, morano, idiota. Cool beans. Stupid. Why did Gatekeeper wait until now to do the raise rather than right after the Alstom? I answered that question, Fubar. Hope you got the answer to that, right? They thought they had all the money they needed. With the current case, and I'm sure you asked that question before I gave the answer, so it's all good. With the current, here we go, Rice. If this is a dumb question, boy. With the current case in the Supreme Court about if the government needs to pay back all the tariffs they imposed, what effect do you think this will have on the market if they rule against the government? I don't know. Sometimes the best answer is I don't know. It's a fair question, but I don't know it. The answer. My gut tells me it would rally because it would alleviate all of this, fighting going back and forth between these countries. Remember what happened when they announced the tariffs? Imagine what would happen if you reverse all that. Then we never have that crash. There is some growing negative public sentiment towards companies that assist certain government agencies with surveillance information like Flock, Ring, and Palantir. Do you think this could have an effect on Gatekeeper? Gatekeeper doesn't do that. And there is, I don't think there's going to be any pushback. And I don't care about negative public sentiment. Like, you know where there's negative public sentiment? When you go into a New York City subway, when you go into a St. Louis subway, when you go into a Houston subway, there's negative sentiment where you can get mugged, killed, thrown on the tracks. I've seen videos. I did extensive research on this. It was horrifying what's happening in the transit systems around our country. And what we need, you got also fare jumpers, people that jump over the turnstile. I've never done that myself when I had no money. They need to make the subways, the buses, everything safer for everyone. So putting these cameras and having AI monitor these public places is going to happen. Big Brother is coming, and it doesn't matter what the sentiment is of the public. It's going to happen, and if the public doesn't like it, then the public can not go outside. The public can not go on public transportation. But guess what? Far more will, because they will finally feel safe. Okay? I want cameras on Ocean Drive to make people think twice about doing a public execution on my street, which happened last year. Okay? 3 guys had a target in mind. The guy started walking by. The executioner came out from behind, popped him in the head. Everybody scatters, unloaded the clip on his body, less than 200 meters from my penthouse on Ocean Drive. Please put cameras up there. Please have AI connected to it. Please scare people into thinking, if I'm going to execute somebody, I'm not going to do it on Ocean Drive, that I'm not going to do it in a New York subway, that I'm not going to do it on a Philadelphia bus, that I'm not going to do it in a transit system in Houston, Chicago, LA, San Diego, etc., etc. It's going to happen. Is the current government shutdown having an effect on the speed Gatekeeper can fulfill its current in-progress contracts? These are not federal deals. These are city deals. Okay, these are municipal deals. It's a federal mandate, right? But a mandate doesn't stop just because the government does. And by the way, don't worry about this. Like, this shutdown could end at any moment. They always do, right? It's not going to be a lasting. By the way, I didn't say this before. A government shutdown, if it affects the market, if it affects your company, is an opportunity to buy, because inevitably the shutdown will end. There will be no shutdown at some point in the probably near future. And when that happens, then the money starts flowing again and everybody gets caught up on what happened. So there could be a bad quarter because they couldn't collect money from the federal government, but then it comes back in spades on the back end. So take advantage of that and have #patience. Stan Druckenmiller. Forget Warren Buffett. Warren Buffett is high up, but he's second to Stan Druckenmiller. And he says he always buys for 18 months. He looks out what he thinks the stock is going to be in 18 months, and that's what he buys off of. 18 months down the road, I see a lot of these stocks that are getting whooped being up. Okay? So you could do worse than follow Stan, a multi-billionaire who did not have one single bad year in 30, averaging 30% a year. I averaged 40% a year for 30 years, but off of a smaller base, and I had 3 bad years in the mix. What are the key metrics you'll be looking for on the SNES earnings call Monday? So there's another one announcing earnings. I just want to see revenue picking up. These guys are a long way from profitability. Revenue has to grow dramatically for them to get to profitability. Okay, that's why this remains a speculative name. And I warned you, right? I own some, not even 1% position, because I know the rule. And I should have followed the rule. Money Mark broke his own rule. And what happened to Money Mark? He's losing money on a speculative name in a yellow alert. Speculative names should not be owned in a yellow alert. This is what happens to them. This is what happens to them. Okay? Crash. Burn. Okay? We will have, if this continues, an opportunity to buy more of this. We will have an opportunity to buy this stock in the second inning, right? If they have a good quarter on Monday, right? If they make significant profit. By the way, they've been selling tons of this stuff on Amazon. Business seems to be going well. But it's going to be many more quarters before they're profitable, in my opinion. And we're going to have a chance. You know when I love to really back up the truck? I own the stock. But when will I back up the truck? When they're about 1 quarter away from profitability. When nobody knows who this company is. And they're not profitable yet. But I can do the math and figure out these guys are about to turn profitable. And when they do, when they put out the press release that says, SenesTech turns profitable, a lot of times those stocks go through the roof. Okay? Okay, 3:40. We got 15 minutes left. Lightning round it is. Is equity raise better, or can Gatekeeper could have taken loan debt raise? The CEO is the largest shareholder. He made the best decision for his money, right? Which is the best decision for our money. We can second guess him, but he had the option. He has a bigger share position than me, you, anybody else. So I can only assume that he made the best decision for himself, which is the best decision for us. Hey, Mark, do you have, and by the way, so what if he didn't? You're going to sell the stock, right? Eat it. That's what we got to do. Eat it. Or buy more shares like I did. Hey, Mark, do you have lines or charts for ASML? I don't follow the stock, so we won't do that one. Gatekeeper, did you like the two agents they used for the offering? Yeah, they are Canaccord. I like Canaccord. There was nothing wrong with that. Ladias 11. Careful. You've been warned. People do not accuse me of such things on my show. Okay, I've been doing this for 30 years, and I'll be damned if I'll let somebody even imply that there's a pump, because I start the show by saying, don't buy anything on my word. Don't do that. It may have been mirthful. I assume it was mirthful and not trolling, but you don't want to take that chance. We stay professional on this show, and that means not taking a chance. I remember taking a chance when I was younger in the corporate world and made a comment to my boss and my boss's boss that I thought was funny, and it wasn't funny. It didn't go over well. You don't want to take those risks. Yes or no will suffice for me. Gatekeeper, 10 million bought deal, private placement is a bullish raise. Of course it's a bullish raise. Dude, I'm going to give you the dummy treatment. Now, you're not going to get a yes or no. I teach what's the difference between a bullish raise and a bearish raise, so you should have answered the question yourself. They didn't need the money, and therefore it was a bullish raise. Okay? They didn't need the money to stay afloat. They only wanted the money to accelerate their business. And you know that because they had enough money. They're profitable, $7 million in the bank. You can answer the question yourself. Don't lean on me. What's going to happen for the rest of your life when you see raise after raise after raise after raise? If I get hit by a bus tomorrow, you will not be armed to make your own money by buying bullish raises, because that's what you're supposed to do. You avoid bearish raises, you buy bullish raises. And if you can't answer that question, if you come on Friday and I'm dead, you're dead. Learn, stupid. Do you have any take two shares? Don't ask me questions like that. That's a dumb question after a dumb question. I'm not even going to ask. That's 2 strikes against you, and it's the lightning round. I'm not even answering the next question. Do you track green and red trend lines for the Mag 7? Don't do that. Listen, here's the thing. For big cap stocks, right? I've talked about this before. For large cap, long established companies, you can just draw a line under the tops and bottoms, and the stock will probably follow those lines over the long haul. Okay? Because that's what giant, slow-moving companies do. They stay within their long-term technical range. Just draw 2 parallel lines that encapsulates the whole chart, and you probably have the right chart. For large, big companies, which the Mag 7 are. Okay? Look. All right? That's the best I can do for you. NVIDIA is an exception because I became an expert on NVIDIA using experts, and these are risk-reward lines that you would not have been able to draw because this was an extraordinary circumstance starting right here when it busted above its long-term, right? The highs and the lows. You would think, well, this is it. You got a parallel line here under the lows. You draw a parallel line to map this high to see where the high will be, and then you think this is the high. No, this is not the high, because right about here, ChatGPT 3 and sends it into a whole new stratosphere because it was a whole new company at that point. Hope that helps. ARAAF chart you're looking for. There it is. We should zoom in because this is more of a technical play, a speculative play on rare earths. That's what it looks like right now. Okay. Not so pretty, by the way. Constructora, you almost never ask a question. T. XRF. Here's your chart on that one. Looks pretty good right now, especially with copper becoming a very important item, right? Strategic to the United States. It's on the list. How is ARAAF not wait time with blah, 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 blah? Good question. Good observation, David. They are in wait time. They're a development stage company. But with proven reserves, and there's high confidence that they're going to be able to get that stuff out of the ground. But it is still wait time. That doesn't change anything. Great observation. At what point did Gatekeeper transition from grapevine to gold mine? A long time ago. Long time ago. This company's has been growing for a long time, bro. This has been a gold mine company for as long as I've known it. Okay? It's just now their opportunity has gone through the roof. They went through a rough patch. You can be a gold mine stock and have rough patches. This was a proven business. Growing profitable year after year after year. That's a gold mine company. Growing and profitable is gold mine. But they have rough patches. But now they have like the wind at their sails, my friend, because of this federal mandate. How does your strategy differ from that of Mark Minervini? Bro, watch the video, read the article. Like, we're not even close to each other. Mark Minervini is a technical analyst. I am a fundamental analyst. We couldn't be more different. And that's the only reason why I follow him, because I want his input as a technical analyst, which I'm not. In regard to Gatekeeper and its massive growth potential, is this the type of company that private equity would buy? Sure. Hi, Mark. Pretty new here. For Gatekeeper, do you think there's potential for a strategic partnership with Motorola now that they added Hamish Dobson? That might be the question of the week. That is a beautiful question. A beautiful question, because it shows me that you've been paying attention, that you saw the Hamish Dobson addition, the connection to Motorola being huge in the train business, Gatekeeper recently forming a strategic partnership with Alstom, another giant in the train business. My friend, welcome to the wonderful world of you are smart and realize how to connect dots. Okay? Yes, this is the sort of thing that makes sense, right? When you start to connect the dots, why did they raise money? They didn't need it. Therefore, there must be more business coming. Where's the more business coming from? Well, they just added somebody with a history with Motorola, and they just made a deal with Alstom. Are they going to do a deal with Motorola? I don't know, but it makes sense. Beautiful. Thank you for not being stupid rice baby and stupid cool beans. Thank you for not being a moron. Mark, what can I do to join the WhatsApp group? Daddy, you've been on the show enough times to know, don't ask that question, all right? I find you, you don't find me. Write it down this time, because I have said it. You don't have it in your notes. I find people to add to the WhatsApp group. I announce when I open up the WhatsApp group. Don't ask me. Nobody ask me. If you ask me to get added to the WhatsApp group, I will never add you to the WhatsApp group, because I've told you not. Like, here I am. The only place I talk about the WhatsApp group is here. And then I say, I decide when I find somebody that I think deserves to be in that WhatsApp group. And by the way, a lot of you in that WhatsApp group deserve to be kicked out. As soon as I find time, I'm going to kick a lot of you out, because I was wrong about a lot of you. But don't ask me to get added, because that will prove that you don't know how to listen. There's cotton in your ears, and I don't want cotton in your ears in my WhatsApp groups. Daddy, you're immune this time. Does the government shutdown cause a delay on contracts with Intermap and the U.S.? Not necessarily a delay it could be a delay in contract signings. It could be a delay in payments, but I wouldn't worry about that much, to be honest. Like I said, these things are, and by the way, TMSF. The stock's down. What are you going to do? Sell the stock because of something that's already happened? The stock on sale 33% on fears of this and that? It's too late. It's too late. You should have asked that question 2 weeks before the government shutdown, when there was fear of a government shutdown. If there's a government shutdown, will this affect Intermap? Well, guess what? It probably already has. We have 6 minutes left, which is plenty, by the way, for a couple more questions if you have. There's 2 more in the queue. If you have any other questions, let me know. Regarding Curiosity Stream, is there anything particular you are looking for during the earnings call, positive or negative? I'm curious to know if there's anything specific to know that they're continuing on a good path. Good question. Yeah, I care way more about the commentary than the actual numbers, right? Because this is massive. Like, the need for video to train LLMs to enable AI to take over what Hollywood does, to put Hollywood out of business. It's never going to put Hollywood out of business completely. But this is the most existential threat to Hollywood ever. And OpenAI and the like, Grok, etc., have the potential to be the new moguls, the new Hollywood. Silicon Valley could become the new Hollywood, right? These AI data centers become the new Hollywood. That's a monstrous, an unfathomable opportunity that you can bet Elon Musk at OpenAI are going to go after with full fury. But they need to train their LLMs on this video stuff, right? Good question. William, you don't know how to follow instructions, so you're not getting your question answered. Sorry if you're late. I'm sorry if you're new. You can go back and watch the replay if either of those things are true, because that's what you should do, right? If you joined the show late in the show, go back and watch the beginning of the show, and you'll hear the rules on how to get your question answered. You didn't follow them. Why would gatekeeper... I'm not going to call you a dummy because I don't remember seeing you before, but next time I will. Why would gatekeeper raise at 150 rather than close to the current share price? Because, David, that's just how it works. In order to get institutions on 24 hours notice to invest in your company, right? Because, and by the way, why 24 hours notice? Because they don't want to, like, these are snap deals. We're going to bring you over the wall. This is how it works. I've been brought in on these deals, okay? In fact, there was a deal. It was a company that I expected to do a raise, and I knew it was going to be a bullish raise. So I wanted to get in on the deal. I knew who their investment bankers were. So I called the investment banker up and I said, I want to open an account with your company. Okay? And I want to be informed of any deals because I have a lot of money and I will participate in your offerings. And sure enough, very shortly after opening the account, I got a call from one of their reps saying, hey, we'd like to bring you over the wall. And what that means is they're going to tell me about a deal. I'm going to give them a yes or a no on the deal, but because I've been brought over the wall, if I tell anybody about it, if I trade any stock on that, if I buy any shares from anybody except them, I am breaking the law and I can go to jail, right? So in that moment, I have to decide yes or no, will I be brought over the wall even before they tell me what stock it is, right? Because that's part of the over the wall thing. Which means for the next like 72 hours, so if they mention a ticker symbol that I own stock in, or if I'm accumulating stock in, I'm no longer allowed. I need to stop buying or selling that stock immediately or I'm breaking the law. It's a tough decision, right? But I said yes because I was hoping he would give me the ticker symbol I was looking for. He did. I had already done my research, but most people don't. You don't know what ticker symbol's coming. If he mentioned any other ticker symbol, chances are I wouldn't have known what it was. Right? So what happens when somebody offers you shares of a stock that you've never done research on, you don't have time to do research on, we need your answer today, right? That's not enough time to do research, but what we're going to do is give you a 15% discount. That's what they have to do. They have to give a discount. Now, if it's Apple, everybody knows Apple. Maybe Apple only has to give a 1% discount. But most companies have to give a discount. That's just the way it is. It's not just gatekeeper. It's everybody has to give a discount. Sometimes they have to give warrants. That's even worse. They didn't have to give warrants. It was a straight deal. I would have liked a better price, but they didn't get it. Do you think that the CEO, the largest shareholder, didn't want a better price? Of course he did, right? Put it in your notebook. Put it in your notebook. Learn these things. It's very important for you guys to learn these things. Do chart gaps typically get closed? Yes, they do. Typically. For VTSI earnings on Monday, would you say quarterly bookings and total backlog are the most important? Yes, always the case. And by the way, yes, VTSI on Monday. Holy cow, we got so many earnings on Monday. Got to add that to the list. VTSI earnings on Monday. And it was government year end, so it should have been decent for them, right? Because they get a lot of business from the government. I don't know what the shutdown impact is on them, right? So could be a mixed bag because you had September year end, could have been great business, and then they might come on the call and say, we had a great quarter, but right now things are a little slow because there's a government shutdown. I don't know. What I do know, the one thing you need to know, the one thing that you need to know about any of these companies is where is it in the risk reward range relative to the number of cylinders it's operating on. Okay? And VTSI is starting, right, to operate on more cylinders. If this is a good call where they say we're finally feel like we're getting out of the rough patch and operating on more cylinders, then this thing could start shooting up. But I don't know if that's going to happen. Remember the rule, hashtag it's better to react than to predict. Because we can't predict. We're not God. You can't do it. You can take a guess. You don't want to make investments on guesses. And it's 3:55. We have one question left in the queue. Do you anticipate a slowdown in the business once the federal mandate ends? I think so, but that's not going to happen for another 2 years, my friend. So who gives an F? What's going to happen now is the investment bankers who just made a nice paycheck from this $10 million raise they're going to probably do what they always do, which is in a few weeks, they're going to initiate coverage on the stock. And they will probably value the company off of the 2027 earnings, not 2028. And 2027 earnings should be spectacular, and they put a nice multiple on that, and they give a nice flowery price target, and we might get in a few weeks a strong buy rating on Gatekeeper, $3 price target, and the stock goes up, and you're gonna be like, why didn't I buy it at $1.49? I should have listened to Money Mark. I should have bought a notebook and a pen and wrote down what he said and learn how to be a great investor, because he's here every week, 2 hours, for free, no sponsorships, no advertisements, no BS, no ripoffs, no CNBC, no college, none of that stuff, none of the 10,000 clowns out there. I'm here to teach you how to become a multimillionaire like me every Friday on Stock Talk Live. It's Money Mark. Have a great weekend. Take care, guys. We get a reversal in the market. Look at that reversal. Wow. Holy. Fighting to hold that 50-day moving average with that negative sentiment out there. Ooh. And by the way, thank you for all the comments and thumbs up out there. I'm going to check out all those comments now. I can only read the question marks, but I do appreciate the comments. Keep them coming. I do read them. I do appreciate them. That is my reward for what I do for y'all. We'll talk about that next week. Where is my list of earnings for next week? This one also. VTSI. All right, good. Okay. 358.